Welcome to the CIO update from Emirates NBD. My name's Gary Dugan. We continue to see markets excited by the prospect of the presidential election of Donald Trump. The hopes for greater growth in the US economy are playing out through stronger equity markets and weaker bond markets. We think the rally in equity markets will continue. We're seeing upgrades to GDP forecasts for the US and indeed for other parts of the world. We're seeing an expectation the Federal Reserve will increase interest rates, and that's of course dragging down bonds and bond yields rising, leading to some modest capital losses. These trends are likely to continue. As we go into the first quarter, analysts are expecting now stronger earnings growth than we've seen for some time. And in the case of bonds, they're getting increasing concerns that the Fed may push on with further increase in interest rates through next year. Elsewhere in the emerging markets, there's certainly been some fallout. And one country in focus last week was Turkey, where the central bank was forced to intervene by increasing interest rates in order to protect the currency, which had been under some pressure. We think Turkey will continue to be challenged by the environment given still high inflation and also concerns about the politics of Mr. Erdogan and his government, particularly when he challenged Europe last week to suggest he would open the borders to allowing 3 million refugees to leave and pour up into Europe. In Egypt, things are looking a little bit better. We've seen this currency also under pressure with a very substantial depreciation and devaluation by the authorities in recent weeks. The good news is that international investors are starting to show some interest in the country and invest in T-bills. And this is what we believe the government will be generating and putting into the market into the turn of the year. Certainly fresh capital into that country will provide a significant prop to the currency and probably bring back investors as we go through 2017. Locally, we're seeing a lot of focus on the oil price. This week's OPEC meeting is crucial. I think the most likely outcome is a compromise that allows for a capping of production rather than a cut in production. We think energy stocks in particular could focus on this, and we could see some good performance, given that many of those stocks have not performed particularly well, even with the Trump effect, and have seen good support from their still very high dividend yields. So the markets, of course, remain challenging, but with a better growth outlook, risk assets look like their run will continue. Thank you.